second. One second. Good morning. Good morning, Europe. I hope you can hear me. I hope you can hear me. Just doing some final prep. So the markets will open in approximately 45 seconds. The first thing I want to do is, well, I suppose good manners will dictate that I ask you how you are. I hope you're well. Hope you had a good night rest. It's Friday, that's something. I can't help but look at the American markets, and then I look at the European markets, in particular the DAX. So the DAX made an all-time high again this week, while the I think it's the Nasdaq in particular. So the Nasdaq had a peak at 22,000. So a 10% correction on 22,000, well, it's 2,200, right? So that will take us down to 20,000. So we're down up just shy of 10%, or pretty much 10%. What was really interesting for me is how the normal relationships have been turned on its head. And what I mean by that is that when you see the US dollar weakening, it tends to be that I'm showing you here against sterling, but it could also be against the euro. It tends to be that the market is risk averse, and the opposite is happening here. The market is going through a contraction, the stock market, and yet the dollar is weakening. It tends to be the other way around. And that's somewhat an unusual, and it almost feels like this is engineered to happen for whatever reason. Anyway, so as I said, it's Friday. I hope you're well, and the market's open, and here we go. Focusing on the DAX and on the FTSE, as I always do. I had a phenomenal trading day yesterday. One of those trading days where when the day is over, you look back and you go, wow, that was a good day. When I'm trading, I tend to not look at my P&L. I try not to get swayed. But even I know when things are going well, when you're hitting the buy lows and you're hitting the sell highs, you think this is going well. And you add and the market goes in your favor. But I wish it could have stated that, but it unfortunately didn't. I seem to attract an audience that think that they can, because I'm accessible on Telegram and because I reply to every comment that I get, they seem to think that they can say whatever they pleases them with no filter. And that's, to me, it's, I wish I was more thick-skinned, but I think when you're doing this for free and you are trying to be an antidote to what you perceive to be the abysmal information that some YouTube influencers pump out there in terms of conspiracy theories of the market, in terms of magic secret setups. It's utterly, and charging for it. It's really utterly demoralizing that people can't discern the difference between shit and Chanel. And it makes me question whether it is worth doing at all. You have people like Al Brooks with his team, Tim's, Rose, Brad, who are creating really valuable content, just incredible price action content. But they charge for it. And yet, they can barely get 100 subscribers. And then you have people who are peddling abstract theories that look so complex that there has to be something to it. And yet, you have but a very, 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 very marginal amount of people that are actually successful from it. Yet people spend oceans of time. And these individuals, when pushed to trade live themselves, couldn't trade themselves out of a shitty wet paper bag. They just couldn't, in spite of repeated attempts. And yeah, I'm probably old school. And I trade my account live. I've traded a big account live. And this year I'm undertaking a challenge to grow a small account with a much tighter risk alignment than I would normally deploy if I was trading a bigger account. But it's still working. And yet, in spite of that, I receive the most obnoxious comments. I do it for free. I'm literally trailblazing. And yet, my videos, and it's really not about the videos, I have to emphasize that. But I get a fraction of the views. In spite of doing everything in real time and sharing how I do it, and with a visible proof on my account that it is working. And and I think that's what hurts the most. I've also made a decision not to engage with YouTube adverts because I find the adverts distracting for the learning experience. So I had a really long and hard think about this last night, and I'll continue to do so. I'll always trade. My love for trading hasn't gone away. But I admit yesterday, my love for sharing and for engaging took a significant hit because I'm not supposed to feel like absolute shit afterwards after have been in a dialogue with some unappreciating twat. In this case, there was Janice and there was Peter, whatever they were called. That was actually their actual names. And you're thinking, where's the respect? Why do I deserve being called a fucking prima donna? It just, where's human decency? And so this being so approachable is actually backfiring on me tremendously. Okay, so we have, and I hope that this doesn't come across as ranting. I personally feel like I'm just sharing what my headspace is like. We have a first bar positive in the FTSE. I don't know if you know this, but the first bar positive has failed. I think it's 3 out of 3 now. And we have a DAX, which is significantly gapped down. We closed up here, and then we're here now. So I'll show you what is occupying my analytical mind. We have a low down here. In the Dow Jones index on the weekly chart. Sorry, I just need to find a piece of paper to blow my nose. 1 sec. Sorry about that. Just need to blow my nose. So we have a low here in October 2023, and I use a cycle called the 72-week cycle, and that 72-week cycle, if you follow the count up here, is this week here. And this is a little bit unusual for me, because the 72-week cycle historically has always been okay. It is trading at an all-time high, or is trading at its lowest it's been. But what I'm experiencing here is a bar, which is essentially an inside bar of an overall trading range. I mean, it's smack bang, the high is smack bang in the middle, or equidistance from its top to the overall top, and its low down to the overall low. We're basically just perfectly sat in the middle. And I cannot figure out what this bar signifies. I can't tell you, oh, I think this is going to be a high and we are headed lower. I spoke to a colleague of mine, and he has a perfect track record of being the perfect inverse indicator. And he was telling me, yeah, this market is going to crash anytime soon. And that I received that message this morning. I'm thinking, right, I need to be long. Because he literally, every time he says that the market is going to crash, the market rallies. Every time. Of course, I'm not going to mention names, and I won't confront him with this fact, but I do keep an eye out for these things. And some people's emotional system is just put together almost magnetically, going, yeah, they always get nervous at the wrong time, or they always get these feelings at the wrong time. It's just how they're programmed. But as I said, the weekly range in the Dow this week is approximately 2,000 points, 1,700 points, and as a result of it, I'm not inclined to just put on a small position, because I think the smallest stake size that I can put on is half a lot. And if I had a stop loss at the opposite end on a short position, it still would cost me 10% of my account. 1,700 at a half lot, well, still 900, 850 pounds. Okay, maybe not 10%, but then 5%. I also wanted to show you the DAX. Which I can't find right now. Oh my God, I got so many windows open. Okay. So here's the DAX this week. Obviously, I can't show you the today because this is a delayed charting package. I use it for research. I get my real time from the broker I trade with, obviously, as we all do. But there's something about this week that is worth mentioning. At least how I see it. First of all, I just want to point out to you where we are right now. We're currently trading, where's the line? It's here. We're currently trading at 23,150. So we are right here, right now. Okay. And I think this observation is interesting. start Monday with a phenomenal rally. First we fill the gap, and then a phenomenal rally takes us to all-time highs. Then this gap down, and absolutely everything that we gain on the Monday is now broken Tuesday. So now we got a Tuesday low. Okay. Some people will put emphasis on that. That's not the forum for it. Then on the Wednesday, we are gap up, and we recover absolutely everything that we lost on the Tuesday. And then it's just sideways, and the market decides, what should we do? Thursday, gap up and fill the gap and close on its all-time highs. And again Friday, gap down, completely undoing what we gained yesterday evening. That to me, I would be inclined to use the word manipulation, but not in a sinister way, but more like, okay, market makers are simply pushing this market up and down, getting the inventory and get rid of it, getting the inventory, getting rid of it. It is positive that we are sat near the highs, but it's a highly challenging and actually a good trading market to be in. But I was asked by someone, have you ever seen the DAX do this before? Absolutely not. I can't recall when I saw the DAX basically lose close to 800-900 points in a day when there was very little to it. And I'm sure that these things have a reason, but it is just incredibly strange to see this kind of trading behavior. That's a significant sell-off, and then completely being undone the following day. That's strange. Okay, so, but of course, I'm a day trader, and my specialty lies in navigating the very short-term market conditions. So I shall try and do that. Over in the FTSE, first bar negative triggered a long below 45. It went as low as 43, so if you paid attention, you would have heard me say that I'm not going to take the first bar positive because it's failed. I think it's the failed 3 out of 3 now. So I'm currently operating on a 10-minute chart. Currently trading on 127. So yesterday's lows were down here at 23,065. That was the lows of yesterday. So here's a big picture of yesterday and today. You would imagine that this could be a target. As I explained earlier, it seems like we constantly see an override of whatever gains are being made the following day. Those lines that you just saw there that I deleted, they are something that I have made called the aggressive school run, but they have not been modified yet to factor in the overnight range. So for the time being, I'm ignoring them. Now, and I'm sorry to leave this to last, but what's most significant about today is that it is non-farm payroll. So what I would like to do, I'd like to show you the DAX on non-farm payroll days. The last non-farm payroll was the 7th of February. So here's the 7th of February in the DAX. Had an enormous movement later in the day. But during the actual European morning, the DAX did very little, even though the previous day had been significantly volatile positively. So bearing in mind that this is a 10-minute chart, it stands to reason that it would seem here that every time you think it's going to break down, you want to be a buyer. And every time that you think it's going to break out, you want to be a seller. We'll look at the 10th of January. The 10th of January has a somewhat better structure to it, but it's exactly alike. Just as you think there's going to be a breakdown, it's a good time to be a buyer. However, being a seller here was not the right decision. So the DAX is now pushing below 23,000. It's a 4-hour chart. So I think I like to be a buyer here. So I just bought the DAX. I really wanted to be a buyer below 23,000, but I was too slow. Sorry, 23,100, of course. Apologies. Bloody hell. I like to be a buyer of the FTSE as well. I'm going to do that in smaller size. So that's my attempt to just buy a traditional buy below the range. I'll show you the 4-hour chart in the FTSE. So unless we're going to have a complete meltdown, this is a place to buy support. And the same in the DAX, although the DAX could go to the yesterday's lows, but I took a chance to buy it now. This is not school run or aggressive school run or anything. It's just trying to buy support. If I go back to the historical chart, I can look at the 6th of December. So here's the 6th of December for the December payroll, how the DAX behaved that day. Once the morning settled in, about 50 minutes into trading, it was just an abysmal affair. And it may be that the DAX needs to go lower and then just settle into a trading range. And you can look at the December, which was the 1st of November. So here's the DAX on the 1st of November. But there, the DAX was oblivious to that fact. So now you have various perspectives. I have added to my sterling dollar position. So now I got 3 sterling dollar positions. One at 126, one at 128.30, and one at 128.80. Apologies, just blow my nose. So I'm just taking it easy this morning, not trading particularly big size, as you can see. But the DAX is certainly not. obeying any kind of support. So maybe 23,050 is indeed on the cards. And traditional school run has triggered a short at 87. And as it's taking place below the range, this seems to be a good idea. So maybe I need to close my position and flip short. I've decided not to do that because I will follow the research for how the DAX tends to behave on a non-farm payroll day. So far though, I'm in the wrong. So the DAX is in fact coming down to yesterday's low and is now surpassing them. And the anti-school run, or sorry, the traditional school run actually had worked a charm. But at that point I had already bought the DAX because of my idea of how the DAX tends to behave on a non-farm payroll day. My stake size is small, running about half of what I would trade with the account size. Excuse me. FTSE is in profit now. I made a great deal out of explaining that yesterday against the Nasdaq and the Dow, that if one index is falling hard and the other index is holding, it's a good idea to try and be long the index that's holding. But out of trading principles, I cannot add to a trade that is in negative. That is a recipe for disaster. So obviously I'm not going to do that. DAX is trading below yesterday's low now, and I'm going to get stopped out now. Shame. School run would have worked really well. Damn. So here's the DAX, and it has indeed followed that path that we've seen every single other day, where we have reversed all the gains of yesterday. The DAX is currently trading down here, 23,031. So we're down here now. Thereabouts. And there's the loss, £140. FTSE is also in the equivalent, flirting with its lows. So this was the day where I decided to override my own system, and that didn't turn out well. There's quite some heavy selling ahead of a non-farm payroll. DAX is down 300 points. I wonder how Donald Trump is going to square it up with the American people that the stock market is down. Who knows? Maybe there's a grand plan that we don't know about. I think that was the trade of the morning in the DAX. I missed that. The ranges are getting big in the DAX, huh? Really big. DAX is back to my entry. You know, I don't really have the appetite for more DAX this morning. And I think this market could quickly settle into what I showed you here on previous non-farm payrolls. I'm going to keep my FTSE position. I think the FTSE has good potential. It didn't have nearly the kind of decline that we saw in the DAX. Like, it makes me hopeful that we could see 70 in the FTSE. Will I add to it? Well, if I do, I would let you know about it. I think my first objective is to try and put the stop loss from down here and up. I think what I would like to do, currently my stop loss is at 15. The low for the morning is 28. If we can get a close above 8642 in the next 10 minutes, I'd move the stop loss. I've lowered my stake size a bit and I'm adding to the FTSE. I'll add another in the FTSE. Stand by for a long position in the DAX, small size, small stop loss. Buying it DAX to here. I'm going to use a very small stop loss. I'm buying below prior bar low. I'm going to use a 27-point stop loss. Simply bought below prior bar low. So here's an overview of my open positions. That low we just made was at 50. I will move my stop loss, so I'm just risking 5 points on that position now. No, wait. 15 points on that position. I was asked just moments ago what my favorite strategy is. I don't have a favorite strategy. I attempt to read the market's mood and adjust my approach accordingly. As you can see, all my positions are in profit now, but that could very quickly turn into a loss. I wouldn't say it's a difficult morning. I just didn't read the market correctly when I approached the DAX from the point of view of a non-farm payroll being released later. That was wrong. I should have sold short here. Now I've tried a long position, thinking maybe this is a low. We have two positive bull bars. I'm going to be a buyer below. In the ideal world, I would be able to move my stop loss to break even, but I need to have a little bit of leeway here, and that will cost me 15 points if I get stopped out. In the FTSE, I've tried to add very small to my core position, and even the core position is small. The irony in the DAX here is that we can easily go up 100 points from here, in which case I'll make back everything I lost. But I do need that stop loss here. Okay, so been streaming for an hour. I'm not cutting it here because it's been an hour. It's just because I'm going to let this just sit and do what it has to do. And I'll update you on Telegram if there's any changes to stop loss or taking profit or adding to it. But I'm leaving you here with my positions being, well, pretty much break even. Thanks a lot for this morning. Stay strong.